Hello and welcome to the Indicator Warehouse. In today's video, we're going to be taking a look at the date, the actual date of August 21st of 2014. And what I wanted to do in this video is I just wanted to kind of compare two markets and briefly go over some basic pattern recognition. So without further ado, let's go ahead and then let's get started. Well, all right, that first chart that you saw at the beginning of the video, that was actually the CL 1014 contract, and currently we're taking a look at the NQ 914 contract. And real quick, I just want to ask you a question. Can you see the difference between the two charts? All right, well, time's up. I'm going to go ahead and tell you what the big differences are. First of all, there was not nearly the amount of volatility in the NQ today as we saw in the CL. And the other thing is when we have lower volatility days in whatever instrument it is you're trading, I feel that those particular markets are much harder to trade. Now, that doesn't mean here for today's NQ contract that we didn't have any trades on our Falcon and our Hawk. We probably did, but let's just be honest with each other, folks. It's a lot easier when we have a somewhat trending day and we're continually making either new highs or new lows, which in this case here, we made some new highs today with the NQ, but they weren't real dramatic. Looking at this particular chart right here, what we can start to do with these slower markets is, and this is part of the psychology of trading, we can start to make up our own pattern recognition by doing something just like this. But the reality of it is, for this entry here on the Eagle, it doesn't go very far. Now let's just take a look here real quick, and I want to give you guys an idea of how to spot slower moving markets. I'm going to move back here to the open right here at about 9:25 Eastern Standard Time, just a few minutes before then. I've got 1, 2, 3, 4, 5, 6, 7. I have got 8 bars over roughly a 30-minute period of time, and very slow, sloppy moving stuff. And like I said, we can spot and we can make patterns out of just about anything if we sit here and stare at our charts long enough. But let's go ahead and then let's take a look at a chart where, as I like to say, price is actually moving. Okay, well, the first thing you're going to notice here about this particular CL chart for today is we can see nice clean patterns here with our mean Renko bars using diversified trading systems. Very clear, very easy to spot. Unlike the NQ chart that, well, frankly was headed east pretty much most of the day. The other thing that you're going to notice is this is an entire day's data right here from the Globex open all the way up here until about 5 o'clock Mountain Standard Time. Now, can you see the difference in the number of bars that are made during a more volatile, faster moving day? Quite often I get phone calls throughout the week and throughout the day, people telling me that, well, I'm trading this instrument and it's very slow. It's just not going anywhere and I'm getting stopped out left and right. Or I'm trading that instrument and there's just no patterns. It just doesn't move. Okay, that's fine, but listen to what you're saying to yourself. If the instrument isn't moving, if it isn't producing the patterns and the signals that are in accordance with your day trading rules, I'll tell you, the easy answer is, in my opinion, maybe you should trade something else. Go ahead and take a look at other instruments. Most of you guys know I focus on the NQ and I focus on the CL. There's a reason for that. Typically, when the CL is moving, maybe the NQ isn't, or maybe the NQ is moving and the CL isn't. Either way, I've got two different instruments to choose my opportunities from on almost a daily basis. Well, all right, I hope this video was informative, and if you have any questions, please email me at ray@indicatorwarehouse.com. Thanks, and have a great day.